Welcome back to Return My Capital. Today we're getting back into a video series that I've been neglecting for far too long now, and that's my ETF review series. We're going to take a look at Vanguard's Large Cap Growth ETF, VUG, today. And like I mentioned, I do have a whole playlist dedicated to these ETF reviews. I'm going to continue to roll them out over the long time frame here. And I think it will be a valuable tool for you if you want to see, hey, I'm trying to work this strategy, or maybe this ETF will fit my goals, my time horizon, whatever the case be for you. I think this could be a valuable series for you. Again, we're going to do Vanguard's Large Cap Growth ETF today, VUG, and I'll see you after the intro. So Vanguard Growth Index Fund ETF shares, ticker symbol VUG, recording this Thursday, June 8th. After the close, we're just at $270, finished up about 1% today. If we take a look over the past month, VUG is up 7%. Really, all of growth has been performing extremely well the past couple of weeks. On the year to date, almost at 28%, 27.5% over the past year, 10.5% up on the 5 year, up almost 77%, and on the 10 year, up nearly 240%. If we look at this fund since inception, we can go back to 2004. Looks like February 2nd. It was trading for $50 a share. That may be split adjusted. I'm not positive, to be honest with you. But yeah, if we look all time since 2004, we're up nearly 440% on this growth ETF, large cap stock growth ETF, trading at the very top of the 52-week range, which is from 203 up to 273. So we've been breaking out on this one at least over the past few months. All-time highs looks like, let's see here, end of 21, we got 315. That might be the very peak there. This is a quarterly dividend payer. As with all ETFs, we want to highlight the expense ratio. Critically important if you plan on holding these ETFs for the long term, which I would encourage you to do if you have the ability to do so. So we've got a 0.04% expense ratio. That's as good as you're going to find in the business, as you would expect from Vanguard. It's a quarterly dividend payer, pays $1.63 per share per year. So given its $270 share price, obviously not a high yielding ETF, and that's not why you're buying this one. You're buying it for this 440% return since 2004. Assets under management, don't have to be concerned with liquidity on this one here. We were $87.5 billion assets under management on VUG. And I would just like to highlight something here. You know, we often talk about volatility in the near term can often feel dramatic. It's exciting, it's depressing, whatever it is. Just want to look back here. So this VUG started in 2004. Again, started out trading at $50 a share. 4 years later, right, you have the great financial crisis hit. So in, let's see, August of 08, June of 08, you're looking at $62 per share. Just a couple months later, in, let's see, March of 09, you're looking at $35, almost $36 a share. Almost a devastating decline, right? If you're someone who is an ETF investor like myself, primarily, and you allocate significant portions of your capital into quality ETFs, you're not expecting these huge swings. Well, you saw one here. Now zoom out on the chart, right? Now you're looking, I realize this is a long time, but you look out and you barely even notice the blip on the radar, right? So that's why when we talk about investing with a long time horizon in mind, investing for the long term, the little blips that seem dramatic in the near term, when you zoom out with enough of a time horizon, it's barely even noticeable. And obviously, the performance can speak for itself. Granted, previous performance is no indicator of future performance. You've heard it a million times. Really, the bear sentiment or anyone who has a hold or sell rating on this ETF, it's more indicative of the price, right? A lot of people would say that we're significantly overvalued in the stock market, while an ETF like Vanguard's growth, large cap growth ETF, is going to be very indicative of that because it's holding growth companies, companies that are traditionally, typically overvalued by standard valuation metrics. And if you're someone who's a value investor or you run analysis for a living, you might say that all of these holdings in this ETF are overvalued. And so that, anyway, would be a significant bear sentiment for an ETF like this. Um, Sorry for the tangent. Let's take a look at returns here for Vanguard's growth ETF here, VUG, compared to the S&P 500, which is the typical benchmark that you would compare yourself against. Again, this S&P 500, Vanguard's version of it would just be VU. So if you've heard VU before, that's what we're comparing VUG against here. Price returns on the 1 year for VUG, 8.5% over the past year, compared to the S&P 500 of 2.5%. Looking at the 5 year, VUG is outperforming the S&P 500 by 21%, so a significant outperformance over the past 5 years, 75.5% compared to 54%, and on the 10-year, an even bigger outperformance, 232.5% compared to 160% for the S&P 500 on the 10-year. Total returns, about the same thing, although the S&P 500 certainly pays more in the form of a dividend than the Vanguard large cap growth ETF here does. So the S&P 500 is going to make up a little bit of ground on VUG when considering dividends with the total returns. Possibly my favorite part when looking at an ETF is the makeup of the fund. And here we have holdings, top 10 holdings, sector holdings. So, being that this is a growth ETF, I'm guessing you could predict what the most popular sectors are going to be and what the least popular are going to be. So, we've got technology way out ahead. Almost half of VUG is in tech. So technology, 43.5%, followed by consumer cyclicals, 17%. Also called consumer discretionary. That's where you would find your Tesla, Amazon, I believe. Followed by communication, a little bit higher than I expected, but a little over 11% for communication stocks, companies. Healthcare in there at about 9.5%, financials 6.5%, followed by industrials at 4%, consumer defensive, consumer staples, whatever you prefer, 2.5%, real estate just over 2%, which is actually interesting that real estate is in this, but real estate 2%, basic materials 2%, and energy just 1.5%. So that's for the sector weightings. For the actual top 10 holdings of individual companies, you have Apple and Microsoft in the 1 and 2 position. No surprise there. 13.5% for Apple, 12.25% for Microsoft, followed by Google, also known as Alphabet. It looks like it's down here in 5 and 6 position in the top 10, but when you add up the Class A and Class C shares, they're actually just over, let's see, maybe 6.5%, 6%. So they would actually, Google, Alphabet would actually be the third largest holding in VUG, followed by Amazon at 5%, Nvidia 3.5%, given Nvidia's recent just wild run for 2023 here, really over the last month or two, just unbelievable. But yeah, you've got Nvidia there. Tesla, almost 2.5%, Visa 2%, Eli Lilly just under 1.8%, and then MasterCard 1.7%. So the top 10 holdings make up very nearly the top 10 holdings nearly make up 50% of this ETF. So fairly concentrated. It has 243 holdings. Top 10 is half the ETF. If that's something that you're uncomfortable with, well, then maybe you look at something a little bit more broadly diversified. Maybe you just want to own the S&P 500 and have the I don't know if it's 502 or 503 companies of VU. But yeah, it's a little concentrated. It does have a significant number of total holdings, but the top 10 very concentrated. It's yeah. So again, dividends, not the reason you're buying this ETF, but a factor to consider nonetheless. Dividend yield is 0.61%, pays out $1.63 per year. The 5-year growth rate, the CAGR, 0.5%. You're not going to analyze the dividend with an ETF the same way you're going to analyze it with an individual holding, right? An individual company. We'll take a look at the dividend growth chart here in a second. It is kind of interesting. VUG, they'll go ex-dividend on, I'm sorry, I actually don't have the next quarter here. Their most recent payout was on March 28th. The Vanguard ETFs, they all tend to pay out around the same time at the end of the quarter. So if you're a big Vanguard ETF holder, get kind of a nice payday each quarter around the same time. Usually it's around the same week that they'll all pay out. Here we're taking a look at the dividend growth history chart. Back in 2012, VUG was paying $1.07 per share. 10 years later, in 2022, was paying $1.50 per share. So not significant dividend growth. You see it peaked here in 2018, which is kind of interesting, paying $1.77. And really what this is reflective of, take a look again at their top 10 holdings. Basically, share price is outdriving dividend yield, dividend payments for the largest holdings of VUG. And again, the top 10 holdings are half of the entire ETF. So if their top holdings aren't big dividend payers, well, share appreciation is going to significantly outdrive dividends. And so Apple, I'd have to take a look. Actually, let's pull it up real quick. I know Apple's share price has run up so much this year. I'm interested to see what their yield is. Yeah, Apple's yield is down to 0.5%. Microsoft's yield, I got to imagine it's about the same given their recent share price appreciation as well. Let's take a look at Microsoft's yield. Okay, 0.8%. I know they were above 1% for a little bit there. Amazon, not a dividend payer. Nvidia, barely consider them a dividend payer. Alphabet, no dividend. Tesla, no dividend. Visa, great dividend growth, but still not a high yield. So, yeah, that explains what's going on with the dividend payments here for VUG. In comparison to some of their peers, you've got SCHG, IWF, PWB, and FTC. Those are other ETFs you could take a look at if you want to target this type of ETF for a strategy. I think SCHG would be the most favorable comparison in terms of what I would also pursue if this is a strategy you were targeting. I think SCHG is another very high quality large cap growth ETF with, you see here, the exact same expense ratio of 0.04%, very significant assets under management, similar dividend yield, and somewhat similar price performance. If you're not familiar with SCHG, excuse me, everyone's heard of SCHD before, right? It's the popular dividend ETF. Well, this is just the growth version of that for Charles Schwab. And I think that about covers everything I wanted to hit with VUG. So again, this is just another entry in my ETF review series. Obviously, you can access all those videos from now till eternity. And I will continue to add to this segment, this series, and hopefully build out a real nice library for you to review now and in the future. If you want to, cover back on, say, hey, I'd like some bond exposure. Well, hey, maybe Return My Capital did a review of some bond ETFs or whatever it be. Thank you for watching. Take care. Let's make some money. Bye-bye.